Good afternoon, everybody, and welcome back to another StockTwits Q&A session. I'm Brittany Umar, joined by Scott Red Dog Redler. We're back doing StockTwits again. Feels good to be back.
Look at that. Everyone's been saying, where'd you guys go? We've been here the whole time, just haven't done one of these in a while. So hopefully you've typed in your questions, you've sent them in, and I know we only have an hour, so I have a feeling we got to get going so Brittany could start asking away.
Let's just jump right into today's action first before we jump into the actual questions. I mean, we had a fourth down day today. It seems as though good news is still bad news with that better than expected GDP. What do you make of the day's action?
Well, we're coming in after 4 down days. Typically, we've tried to have some type of bounce. In most of 2013, if you tried to press shorts after 3 or 4 down days, you were probably frustrated. We've been kind of trained to be a buyer of that 3rd or 4th down day, but today, ahead of the jobs report, we didn't get that much positive type action. But all in all, if you look at the chart of the SPX, you will see that lots of the same trends are still intact. Here we are that started this macro trend back in November. We've been riding it throughout the most of 2013. Here is where it got a little testy. We've had some intermediate type of spots to navigate. You had this May 22nd outside day that broke the accelerated trend but held here. That was about 5%. You had this little head and shoulders top. Remember that one? That gave us some signs to take some risk off. That little correction was about 3%. Then we went again. Here was your breakout failure. And then this last intermediate trend to navigate started with the red dog reversal with a nice potent engulfing bar that took back this descending channel. Then we held above it, broke above prior highs, showing health, and then here we are. So if you take a micro look, we talked about the red dog reversal last Friday as a spot to switch some gears. I was right here. We broke above the prior high here of about 1808, made a high of 1813, and then now we've come off almost about 30 handles. We're a little bit above yesterday's low, right on the 21-day. So I do think there are some concerns going into the jobs number because tomorrow, I think if it comes in like 225 or 250,000 plus, people are going to start worrying that they could start tapering in December, and then we have to start figuring out how does the market react to that taper talk or actually the execution of the reduction of pace of purchase. So all in all, I think this is a good spot for traders to be somewhat tactical, and we've had lots of great pockets of tactical type of action to navigate, especially this week and of course over the past year. And again, most of the big money has been made, and macro investors don't care if we're up 2 or 3% or down 2 or 3%. But if you're a trader and you trade the intermediate or active trends like ourselves, you need to worry about what's next for tomorrow and for perhaps into year end.
Right. We have a lot of questions about what's coming up tomorrow and into the end of the year. We have one from Texas Trade asking about Bank of America. He says, Red Dog, I know you were long several times, Bank of America. What are your thoughts on it now?
Well, it depends on your time frame. Bank of America, starting in the year, was one of our stocks that we talked about for the thesis, and it met a lot of our targets, and it's been very buyable at key points. The last point was actually the last jobs report. If you remember the last jobs report, we were talking about this last consolidation. Here's that consolidation going sideways, pretty much trying to put intact a pattern here to absorb what's been a heck of a move to start the year. If you look at the move that this stock has had throughout the course of 2013, it's been really nice. So every time it starts to consolidate, we get excited, and then last jobs report, it engulfed this entire little descending channel right here. So you look at that bar, that's when I think a lot of people in the virtual trader floor started to see me get long it. Here's when it broke this trend line, gave you some nice follow through. Got a little wishy-washy the past week or so. You saw a bit of a breakout failure right here. And now, all in all, it's not acting so bad, but if you were trading for a breakout above 16, it needs some time. So now at this particular point, it is holding above the 21-day, and it's still in the top third of this range. So it's acting fine. It's just not going as fast as some would think. If you're trading it short term, maybe use this as your stop and then watch the 21-day. At this point, it's not clear cut. On the active side, I'd be in a little less. And then on the macro side, I wouldn't really worry unless it broke below 1455.
Any other banks that you think have a more compelling setup right now?
It's a little tough because JP Morgan, I think, was upgraded by Goldman today. And if you look at JP Morgan, it engulfed the prior 2 days. This stock started acting well. And if you look here, this was when it was kind of pent up and you had the engulfing bar from the last jobs report, held higher, got a little wishy-washy here, upper level flag, broke to the downside, and then look at today. it closed really on the lows, closed on the 21-day, so a little weaker than Bank of America, closed on the lows. So at this point, perhaps it tests this gap, or it even tests where it broke out from. So if you're trying to actively navigate it, this is giving you no signs to re-enter yet. It closed really weak, and the banks were actually a drag today. As far as just quickly Citigroup, it too, we talked about this stock way over here. Okay, that's when I think most people saw us put it on the virtual trading floor, which is a great tool so you could trade alongside of us. Had a nice breakout. This is when it got a little wishy-washy. I had an upper level stop right around here. I haven't revisited it this entire move down. Maybe tomorrow we'll see what happens, but this actually closed below the 21-day. So in order of just a relative strength, Bank of America is still the strongest, JPM a little weaker, Citi a little weaker, and Goldman has just been very erratic and hard to time.
Right. Always got to keep an eye out for that relative strength. How about solar stocks? We have one here from Sheplik, who says, what do you think about solar stocks right now in the dead of winter, like First Solar or Solar City?
Earlier in the week, I think we had them in one of our sector spotlights in the morning call. Let's take a quick look at Solar City. Solar City, Elon Musk, we love the guy. Innovator, guy is just, on top of a lot of different sectors. Here's when you had this small red dog reversal. Corrective phase went below this prior low of 43.70, came above. That was your pretty much signal to get back long after this corrective phase. From there, quick move up, digestion. Today it closed off the highs, but I still think it's okay. No clear-cut pattern here, or no tight pattern here to execute on. If you're in some, I'd say it's okay, but look at the size of this move, so I wouldn't be too heavy. You look at FSLR. Some people in the virtual trading floor were talking about it today. It is getting tight. Here is your support. Here is your wedge. It looked like it was going to go yesterday, didn't, and today an inside day. Still needs time. I would wait for this to resolve because if you're looking for upside, it really has to get above this 62 at some kind of volume. If it were to break this, it could retrace and retest this gap. So I think unless you're committed to something like FSLR, I'd be careful. It hasn't proved which way it wants to go. And then let's just look at one other one, which we typically look at in the solar, CSIQ. This is why there's some frustration on the floor right now, because you get a stock like this, it looks like it's going to break above this flag pattern, and then today engulfs it, right back into the pattern, and that's not what we like to see. We like to buy high and sell higher, not, have a day one and then it be engulfed on day two. That just shows you that maybe a little less is more, especially in that sector that's had a big run.
Gotcha. Well, how about we talk Apple and how it handled the China mobile news today? We have a question from Zyle Trades, who says, how do you trade Apple on days like today, and do you think the name is a bit extended here now?
I do think the name's a bit extended. I love Apple when it's tight. I like it when it's, getting coiled, ready for a move. So this way, perhaps we could stay with it for multiple days. The last type of trade that was set up like that was going into Thanksgiving. Apple gave a lot of us on the virtual trading floor something to be thankful for. I think I had it from that Monday into the Friday. If you're a member of the community, you could probably think to yourself, what was that price that Red Dog was talking about? Boom, 526. You kind of remember numbers in your head if you look at them that long. You look here at the pattern of Apple, and you will see that was right here. Okay, look at this nice descending type of triangle or descending channel right here. Started to poke its head up. Boom, that was your entry. And then you even had another entry when it cleared the prior high here of 538. And then, at this point, I think, a lot of us started to just trade it daily because that was a nice size move, kind of like the last time it traded above this descending trend line. And now it opened up on the news and closed near the lows. For me, I came in long Apple and I leave flat Apple. I sold some pre-mark and I sold some during the day. And for me, with it extended from the 8-day, I think it needs some time. Doesn't mean that it's done for the year. It doesn't mean that that's the top. But overall, you look at this pattern here. This was a time to get excited. That was a time to get excited. Here was a time to get excited. And now coming into fill in the gap of resistance, it's more of a trim and trail until it resets up. And then I think at some point, maybe into 2014, it could trade higher. It could try and test this 610 area or maybe even a little bit higher. But at this point, short term, look how extended it is. It's not tight. It's just a trade on a micro time frame. Or if you're long it for a move into next year, just know that it's come a long way and you're going to have to give it some space.
Well, speaking, as you mentioned, short-term outlooks, we have one from Rudy Trader asking for your short-term outlook on Facebook.
Facebook is, we have a love-hate relationship. This stock in the beginning of the year, we talked about the cup and handle pattern. I was on with Kramer. I was on the street. I think the day that, or the week I said, I think it can go back up to 38. I think Barron's put a $15 price target on it anyway. That was then, this is now. It's starting to act better. Yesterday was really the more exciting day for Facebook. If you look at the pattern here, let me show you why. First of all, this is the cup and handle pattern. This is a more macro pattern. This is the type of pattern we talk about in our swing trading course for those that don't trade actively but are looking for relative strength. Here is that descending channel. It gapped up 2 quarters ago on earnings above resistance, and then it became a really nice trade. From there, it went as high as 54. So from 25 to 54, why wouldn't it try and pull in or consolidate? That type of stuff is healthy. So if you look here right now, this was 2 different action points. Here's a red dog reversal when it went below 44.04, came back above it. That was a spot to switch some gears if you were short, riding it down from here, maybe switch some gears. And then here's when it broke this descending channel sideways. And here was your nice ad. And what's funny, Brittany, yesterday, after hours, I saw it down 70, 80 cents, and everyone's like, oh, it didn't get added to the S&P, it's going to fall apart. All the fear mongers were going nuts. And I might have said something like, I could go green today, that it was strong before the S&P news, and it wound up being a good trade. So if we go back to the chart, if you look here, you see an inside day, which to me is healthy, still above this 47.50. And then I think at some point, it tries to take back this moving average. So overall, I am in some Facebook, and I think it's acting pretty well, and I would stay with it as long as on the short term, it stays above 47.55.
47.55. All right. Well, short term also, Rudy Trader wants to know your short term outlook for Amazon.
Amazon, this stock has my number. Believe it or not, I think on Monday when it was near 400, I tried shorting it and I lost money. But anyway, I got to work on being short or learning how to trade from a short side. Maybe Mr. Evan Lazarus could help me with that. So with that being said, Amazon, sometimes it's set up, sometimes it's not. Here was, the gap up after earnings, came in, tested the 21-day. This was a nice spot when it crossed this trend line here. And then what did it do? It held higher. Here was your breakout. This is when everyone got all excited. I think after Cyber Monday or Black Friday, it's pulled in. It's trying to hold here. So with that being said, it's still above the 8-day. It's been riding this 8-day this entire time before, I guess, November 12th or so. So if you're trading a long trade versus this 381.49, if it were to break this, it probably could retest this trend line, which comes in at the 21-day right around there. And for it to get going again, for momentum to come back, it probably needs to clear 391. So it's not really that set up. I would give this some space. I think it was better set up here or here, and from the short side, into that exhaustion. And now it just needs a little bit more time to show its face.
Let's talk a little bit more social media. We've talked a lot about Twitter and the difficulties that you can have trading it because it's a new issue and there's not that much to work with. Why did Twitter go up today?
Because I think we talked about it in the morning call on Tuesday, and it was in the morning note listed at an action area. And everyone was getting negative on Twitter. Lots of different downgrades on it. I think most or a high percentage of the analysts out there were talking 35, 30, whatever. Meanwhile, it was building a floor above 40. So with that being said, we know that IPOs are more about supply and demand and how they react to news. So with that being said, Twitter went long on my VTF a few days ago, okay, right in here. So if you are a member of the virtual trading floor, you would have seen, besides reading my note and seeing the morning call, right here was my spot that I got a little long. This was a descending trend line. This was a prior pivot. So at 42, we talked about perhaps it acting better. That was a spot to add. Then today, it opened a little bit lower because some of the social networking stocks were down because Facebook wasn't added to the S&P. This was another buy area above this 43.92, and look at this nice move. So my rule is, you have a day one. This is when you add. This is when you sell some. I actually sold some, and then I bought a little bit back on the close just because it pulled in. But either way, now I'd like to see it hold above 44 and continue to build. But overall, nice little 3-day tactical trade with some commitment. I think it surprised a lot of people out there.
I think you're right. All right. Well, we have lots more to get to. We're going to be joined by Evan Lazarus right after this quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Good afternoon and welcome back to our Q&A StockTwits session. I am actually joined here. I have the luxury to be with this handsome fella, Evan Lazarus, the CEO, the new CEO of T3Live.com.
How you flatter me.
You know, it's hard to stay. Look how tall he is, by the way. You grew in the last 3 months.
I guess I did. It's good to be home. It's good to be back in the studio. It's been a couple of months since I've been on camera. So
well, a lot of people are asking about you. A lot of people are saying what's going on. And you know what Evan has done is Evan has been obviously involved with T3 since the start, and he's heard a lot of different type of informative questions on what we could do better with our products, what the site could do better to give you guys the edge to trade on multiple time frames. So I couldn't think of a better person than Evan to actually answer some of these questions, because everyone knows that I'm not on the admin side. I'm more of the strategist, and I typically have the wrong answers, which I usually have to refer to you. So with that being said, we do have a few questions from the StockTwits universe, and they want to know, why did you change off the charts? We liked it, but now we actually love it.
All right, that's a nice question. It's more of a statement than a question, but
It's from Stone Street Trader.
I'll tell you that, you know, since I stepped into this role and, you know, kind of backed off of trading for the first time in, I don't know, 20 years or however long it's been since we've been trading together, you know, it was a unique opportunity to sort of grab hold of something that you and I have spent a lot of time building and developing and continuing to build and develop. And I had some, you know, along with a great team, had some really good ideas about things we could do with the community to sort of build our brand, to build, you know, the best trading community that we could, you know, could effectively build. So off the charts is really just a function of our what we do, and what we do, I think, really, really well. Some really good trade ideas in there every day. Had a tremendously successful launch. We've got amazing feedback on it. Some great ideas in there every single day. Collection of input from yourself, me, Mark, all the guys in the VTF, all the mentors, all our educators. So really some very high level ideas there.
Well, would you say that off the charts is for someone that trades all day long, or could it be for someone who's a doctor, a lawyer, a garbage man who just maybe wants the best setups out there, that they could put a bracket order in and buy at a certain point so they could actually catch some of the market moves without being in front of a computer all day long?
So the product was designed with both the active trader in mind and somebody who is even less active. So if you're not participating in the VTF and you're not trading all day, you're somebody who's a little more passive, maybe makes a couple trades a month, one trade a week, but you're just looking for good ideas and a source for good information, this product is probably, you know, what you need or what you should have. Whether you're a swing trader, an intraday trader, the ideas are the ideas, and you can trade them how you see best fit for your own personal style.
A lot of people say, why do we charge such a small amount for it, considering the ideas could pay for itself in one idea for the entire year? Why would you say, you know, we priced it at, well, what is the actual price?
It's $30 a month, or $300 for the year.
Okay, so one thing that I deal with a lot on the virtual trading floor and in the community, which you used to, is people say, okay, you know, I want to learn why, you know, these stocks are triggering, why are these patterns on off the charts, you know, why do we conduct ourselves in this manner, and how do we build our tool belt? You know, so what I recommend sometimes to them is you got to go into the education. You have to look and learn why, so you have the conviction to do it yourself, because every now and then we'll throw a fish in your boat. Yes, that's great. You'll probably buy a certain amount of it, but if you understood why we were doing it and you had the conviction alongside it, maybe you would take a bit more size, a little bit, you'd hold it a little bit longer, or you would just use our parameters. But the question is, how could someone go and learn the reasons why we put some of these strategies in off the charts, or why we execute certain methods on the virtual trading floor? So is there a way that the community can go out there and figure out why we do what we do?
So there's a way. There's lots of different ways. But if you're not a participant in the virtual trading floor and you want to, you know, I spent years as an educator, teacher. I've taught hundreds, if not thousands, of people on methodology, strategies, trading, intraday swing trading, longer term trading. And I think the one common ground that everybody has is that everybody that gets into trading and is relatively novice, let's say under 2 years of experience, everybody's focused on an outcome. Everybody wants to make money. That's what they, you know, that's the first thing everybody does. And nobody ever spends the time to focus on a process. And from my experience, you're never going to have an outcome without a process. So our education is designed to help give you a foundation. It's not something that you can just read once or watch once and then go and do. It takes practice, practice, practice. I mean, how long have you been practicing at your skill set?
I still practice. And like I said on Monday, I was trying to short Amazon, which some kind of trade you probably would have been really good at on Monday. Stock was at 400. I think it went below 388 and I lost money. So we all evolve, we all learn. And for me, I've been trading, I think, since almost 1998, and I've worked on my process, and I've learned on how to use a portfolio approach, a tactical approach, how to own 6 to 8 stocks, how to just create cash flow, how to identify different markets, and that comes with experience. So what we've tried to do with a lot of these courses is roll all of our experience into some of these manuals and some of this online digital footage, so this way you don't have to take 12 to 14 years to learn it. It's almost like the Cliff Notes version. You ever use Cliff Notes in college? I did.
So to that point, for the holidays, we have, I think, just under 50 in-house, but we are going to offer our course manuals. So if you go to T3 Live's homepage, you'll see on the homepage a nice big banner that says our education for, basically it's all of our education courses, 5 manuals for a very, very, very discounted price. And the reason we're doing that is because come next year, our education is going to be completely digital. There will be no physical manuals, and we are looking to get rid of some of what we have here in-house. And we decided that it would be nice for the holiday season as a gift or for your own personal benefit, consume the education at a very, what we think is a very affordable.
Well, you're saying, so right here it says get all 5 courses for only $500. That means you can get the active, the swing, the momentum, all the hard copies just for $500.
Yep, you can click on it.
Okay, let's click on it. Get it now. So this is what they would have to do.
Yep, go down.
All right.
And it explains basically what you get, and you'll see a couple of samples of pages there in the middle from some of the different courses. You can also buy them individually at the bottom if you want to buy one and not all 5, but it is a slightly higher price point. And I do want to say that on the education side, what most people don't know is that if you are a professional trader, there are some tax advantages to buying education courses, although I am not giving anybody tax advice. Some of this could potentially be tax write-off, and it is the end of the year. So
and all I know is on this, okay, there are 5 different manuals, and I know that we've worked very hard on doing them. We're just revamping, so I think you're trying to get a lot of them out of your office.
How many times have you been asked, what is a Red Dog 80-20?
Red Dog reversal all the time, and it's explained in my swing trading course. By the way, in those courses, you know, we had the swing trading course that we're refurbishing. You know, that literally was you know, for sale for the last year and a half, and I think it was anywhere between $1,000 to $2,000, and now that's one book within the 5. So I would say $500 for all 5. If you have some time, you're going away, you want to read, you want to get yourself situated for 2014, you read what is more conducive to your style. But if you get all 5, I think that's a steal. And you know, with that being said, I'm going to let Evan close it off, and then we're going to bring back Brittany.
So what else did we do?
What else did we do?
We launched Scott Redler Morning Note.
Oh, there you go. Okay.
Kudos to my man Redler.
So let's go back there for a second.
Yeah, on the homepage, totally free. Scott's giving you his morning color every day, 5 days a week, delivered right to your inbox. Accolades, unbelievable accolades for the work and effort you put in the content that you provide every day, which is why I really think that our community at T3 Live is top notch. And again, that's a pat on the back to the subscribers, not to you or to me or to anybody on our side. We launched the Mark Trade of the Week, the Sperling Trade of the Week, which comes out every Monday. If you weren't on it this week, I think Mark was long Tesla.
Yes.
So again, I'm not up to the minute on where the stock is, but I think it actually had a pretty good outcome. So lots of good information to be consumed across the board. And for 2014, again, I'm not going to throw anything out there because I don't want to give it away, but we are working on some pretty cool additions to some of the existing products as well as some new stuff. And we'll get to that when it's a more appropriate time.
We'll cross that bridge
right.
when we get there.
That's
we have a lot of eggnog to drink and a lot of celebrating to do over Christmas.
Can I come back and do a daily recap in January?
Yes, you can.
Thank you.
We'll have you back.
Thank you.
All right, and maybe we'll even have you back, or have Brittany back right after this commercial break. Take it away.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, You can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and answering more of your questions. Let's wrap up some of the social media names, Scott. How about Zynga? We have one from Dwayne here who says, what are your thoughts on Zynga at these levels?
You know, if you sold some strength or you got stopped out, you know, around 426, this level is kind of interesting to buy back. Or if you didn't sell some and you didn't have enough, this is a spot that needs to hold. So if you look at Zynga here, I know I was pretty excited about it, but that was when, you know, the pattern was pretty pent up and it didn't take out $4 for a while. So if you look at what happened here, you know, this was the pattern that we were all watching. After earnings, it tried to go right there and then it regrouped. And right around here, I'm like, you know what, this looks pretty good. You know, if this gets above 4, first stop would probably be 450, then 5, and then maybe in 2014, 6. The reason being, you know, also for getting so excited is look at the size of this base. This has been a huge base ever since this gap down. So this is going on 2 years, and look where this came from that outside there. Remember when everyone was saying, oh, this is a $30 or $40 stock or whatever, and then the technicals told you, you know, otherwise. So this has tried to be like a treasures for trash trade. So with that said, you can only think about perhaps where it can go, and the reason why I thought that area, because I thought perhaps we could fill this gap, and then at some point maybe even get back up to where it failed over here, which to me wasn't asking too much. So with that said, we go a bit more short term, and look what's, you know, transpired. I remember on this day was a tough day for a lot of us because we were holding it, making some good money. It looked like it was going to break above this 455, and it failed. And from there, I think that's when it lost some of its momentum. And if you had a high-level stop somewhere around here, you know, you're now looking at it, and it could be an opportunity because this is where it broke out from. So if we get a red dog reversal somewhere in here, maybe tomorrow, you know, look for an entry. But if it starts giving way, I guess the last line of defense would be the 50-day. But ultimately, I think a lot of the active traders started to lose interest once it broke 440 because you had that nice little pent-up move, and now it's kind of just dribbling down. So let's look for some kind of signal, which could be some type of red dog reversal. But as stated, so this, you know, this is the type of stock where if you're holding 8, 9, 10, 11 positions, it could be one of them. It's not something that, or the only thing you trade every day. You'll drive yourself silly. Yeah. So with that being said, you know, if you're trading social media, look at it, but only look at it if it gives you a signal.
Well, if you were trading LinkedIn today as your social media play, you were happy, up 3.4%. What do you think about LinkedIn? Well,
we talked, I think, I don't remember what day it was, but Tuesday we talked social media, and it's been lagging. You know, this one had a similar setup to Yelp. If you recall, we talked about that pennant in a lower level in Yelp to see whether it could resolve to the upside. So if you look at Yelp, it actually did that yesterday. So with that being said, it has been kind of rounding over and correcting, but it held the 50-day, and look where it came from. So you can't really get so upset about a pull-in like that when it's had such an enormous year. So with that being said, for active tactical traders that need things to do, we said, look how tight it's getting. You had a nice move, and now you've seen some commitment to it as it held higher. So coming into today, I'm like, maybe we could see the same type of action in LinkedIn. And I know Sperling did much better with it than I did because he was in there early. It was off pre-market, and then it started to trade through 222, which was one of our spots, and closed pretty well. Next spot here is, you know, close to 230. So with that being said, it closed near the highs of the day. Nice little wedge pattern. So for a tactical trade for cash flow, which is what we look to do as traders, there's your spot. And now even if you're, you know, a macro investor, I think the longer it stays above this, the better you, or better chances of new highs after, you know, such a big move. And we looked at, you know, this well back, you know, or way back here when this had this nice cup and handle. This had a horizontal channel versus descending one you saw on Facebook. Talked about how this could be one of the 3 amigos, new issues that could be good for the draw, and then there you go. So at this particular point, it's trying to consolidate what's been an enormous move. Little cash flow today, and we'll see what happens with the jobs number tomorrow. If the jobs number is hot and futures open up weak, this is something I'll look to for negative to positive through today's high for potential move back to 230.
All right, how about we change the spotlight over to retail? We've got a bunch of questions on some retail names. We have one from Jane asking your opinion on Target, and that stock was down a little more than 1%.
Target's been a little disappointing and kind of like a head scratcher because it's such a great store and you think people are shopping there, cost conscious, the whole 9 yards.
Right.
But meanwhile, it hasn't been the place to be for the last 3 months. If you look at the chart to see what you could have seen here in Target, this right here, you know, because it was acting pretty well for the start of 2013, and then here's where it broke this basic trend line. You know, first it did a breakout failure, which you don't want to see right around here, and then if you take a closer look, you know, if you missed this spot, actually look at the potency of this bar here. So you always want to watch when potent engulfing bars come in because they could change the composure of a stock. And that happened right here on this ascending channel. Then it held below it and then broke again. And then from there it tried to bounce. And I know I was actually playing it for some type of, you know, catch-up play if they wanted a quality name. And it started to go. You saw a little red dog reversal right here where it pushed through and failed. That got me out. And then look at this, boom, boom. And now it's you know, definitely not showing you signs of positive composure. So if we were to break below this, I guess, 62-ish, it could still even see some more prices, lower prices. So I would say if they throw this one away for tax loss selling, because there's not that many things are down, you know, and people want to take some tax losses, maybe we'll look for some type of reversal pattern in January, February for a January effect. But as of right now, it's a weak stock, and you know, it was a decent trade here, then it turned into, you know, void, and now it's, you know, could be a short if it breaks 62. Another
head scratcher in retail this week for some is JCPenney. JCPenney extended Wednesday's losses today, closed down about 8.4%, and you know, some aren't sure why the stock's getting hit this week, being as the company posted strong sales growth in November.
Well, it just shows you that yeah, entries and exits matter, and you have to figure out what's priced in, what's not. I started getting excited about this, I think, like a month ago when it crossed its downtrend. You had your day one engulfing bar, and then it stair-stepped higher all the way until that news, I think, 2 days ago. So anyway, with that being said, you look at JCPenney's, and this right here was the day to get excited. From a move that took all the way in the 20s, all the way down here, this was, if you were short this and then engulfed this range, this was a spot to get long. And then what was important about this spot is that it held higher, it held the top end of this, showing you some commitment. Then you had another level for a trade, and I think this was a really nice trade for a lot of us, and then I got out of the way. Then we were kind of looking for another type trade, which happened right here, and then it failed. And you know, this gave you a good trade when I think we heard about, you know, all the guys up repositioned, and then it, you know, I'll tell you, it looked good. This looked really good. I was sitting in our Short Hills office and, you know, watching how tight this was, and I saw the news come out. It was trading at 1030, 1040, and I thought it was going to hit this 1113. I didn't buy any after hours, so I was going to chase it, and then I came in, I saw it down, and then I think, you know, people got a little disgusted on that, and now look at this kind of you know, trend line that's been following since the lows, broke it hard. So to me, it's kind of in the penalty box. Maybe you get some kind of red dog reversal here if you wanted to try it versus the 50. But you know, these beaten up treasures for trash trade, you have to watch them real closely because when the music's over, they come down pretty quickly, and you know, there are a lot of bad memories in this stock.
Well, one play on the cautious consumer spending theme that's playing out well is Dollar General. Rose after reporting quarterly earnings that beat expectations and raising the lower end of its outlook for full-year profit. What do you think about Dollar General?
What's the symbol? Is it
DG.
DG? Okay, that's Dollar Tree I was looking at. This looks like one of the chosen ones, right? This one, ooh, actually someone might have known something here. Look at this red dog reversal, by the way. When it made a new low, came back above it, so some would have taken that home long, and then look at that, you know, nice gap up that engulfed this entire range. So with that being said, if you long it, congratulations. It's had a nice move. It's been very choppy. I don't know, or I haven't heard many guys trying to trade this thing on our floor, you know, and then especially look at this, boom. I think a lot of shorts got caught here. So it looks okay. At this point, I wouldn't be chasing it, but the longer it stays above this gap, you know, we talk about gap analysis, the higher the percentage it can continue. So I would give this some time to see if it, you know, if it continues. But if you're in it, congratulations. It's been a good stock for you this year, but very choppy and sloppy.
How about a little more on the luxury retail side? How about Coors? Stock One Trader says, what's a good entry for Coors?
This one has been a great stock since the public offering, and at times it's a good trader also. You know, lately it's been a little sloppy, and I don't hear as many people talking about it because it's not as pent up as it was. You look at Coors here, you want an entry, so let's see what we see here because I'm not in it either. You know, just to show you, you know, why IPOs are so exciting. You know, look at this one. This one came public, didn't even wait for the proper accumulation period, and once it crossed above this point, it became a buy, and it trended up this entire time before, you know, consolidating again, and then after consolidating again, it gapped up after earnings. So really, it's the earnings play. You don't get that many clean trades within this thing, you know, unless you're just holding it. And as of right now, Let me see where it is. Okay, sorry about that. Boom, boom, boom. I guess you could say it's holding the 21-day. This looks better than some of the other retailers. It's trying to hang in there. You have this small descending channel here, and I guess above this 8250, it can get going again. It's just right now the market's not letting many momentum names have momentum because we're not sure whether or not this 4-day pull-in was enough. So with that said, be careful. You know, at this point you have a little bit of a trend line here. So if you want to be long versus this 79-ish. But just like we saw today, trying to play a breakout in Baidu, which I know a lot of people are trying to do, including me. Market's not ready for breakouts because, again, we're not sure whether this was the pull-in or if there's further downside. So, you know, I tried buying Baidu today at 170. It didn't work. Doesn't mean it's broken because look where it is. It's still at the upper end of the range, but momentum is not, you know, allowed right now, or things aren't showing that momentum until I think the market gives the green light that, you know, the Santa Claus is coming to a town near you.
To a chimney near you.
Yeah, to a chimney near you. Or if you're in an apartment building, I don't know, the front door.
Yeah, whichever. Elevator near you. How about Urban? We have one from S. Buddy saying, Scott, your thoughts on Urban, please.
Okay, thoughts on Urban.
Closed down about 1% today.
Yeah, nothing really here. Like you look, it had a pretty, pretty pent-up move off the lows, and then, I guess it broke this trend and then held below it, and now it's just dribbling back down. I guess here would be big support. It's below all the moving averages. I don't see anything that I truly like here. I guess it gets streaky when it wants to get streaky, but it kind of failed here, couldn't reclaim it, started heading lower. Today, I guess if you're long, it had a little bit of a doji, so I would trade it versus here. It could see a bounce to retest this on a micro basis, but as far as a macro trade, I don't think it's showing you any signs that this is something that you need to allocate your money to, especially if you have limited cash.
All right, switching gears, Microsoft was in the headlines today, tumbled on speculation that Ford CEO Al Mulally is not planning to leave the company and take over from Steve Ballmer. What do you think about Microsoft?
I think that this stock is interesting, that it's had a nice run this year. It's made some people money who have been holding it. Short term, it's on the highs. It's kind of priced for perfection. So, they wanted him to be the CEO. So any kind of, I guess, setback like that could hit the stock. And if you look, it did hit the stock today. It did come off those lows. It held the 21-day. It held this lower support and acted okay. All in all, it's been a heck of a move for Microsoft. And you look to see, where it came from this year. It's been, look at that. Boom. Very good. But then if you look at the monthly chart, it's still nowhere. Like look at this. It's just starting to poke its head above what's been a decade. You take out this overthrow here, it's been a decade of consolidation. So with that being said, I still think that if they perform at all, maybe in 2014, this thing on a more long-term basis could hit 45, especially since you have some yield, you have liquidity, and some of the lower quality phones are really running their windows. I know my Toshiba laptop has it. I've seen when I was in Russia, a lot of people using the Nokia phone. So there is some consolidation here, and I think it's you want to have your entries and exits, but all in all, I think it can go higher in 2014.
All right. Here's one that we don't talk about as often, Nu Skin, N-U-S. We have one from Redler saying, is it a good time to buy Nu Skin?
Nu Skin, let's take a look, because I don't look at it often, so let's see what the chart tells me, if it tells me anything. This, it's been, I guess, a quality stock, right? Above the 8-day, which is what quality stocks do. They hold their 8-day, tested the 21-day here. So really, since July, this thing has been above the 8 and 21-day with one little test kind of right there. You had, it looked like it was going to break out here, but then came in with the market, which I don't think is the end of the world. But all in all, I would say if you're short term, trade versus here. Trade versus low here of 124. If it doesn't hold 124, you then have the 21-day, and then you have the trend line there. So I think it's fine. It's acting well. If the market gets going, I don't see why this one would not continue. It looked like it tried to, but again, the market's just not letting things fully break out. But this has been a strong stock, and have high-level stops just in case it changes. This stock is priced somewhat for perfection.
Well, clearly everybody is concerned about the jobs number that we have out tomorrow. Let's look at tomorrow and then into the remainder of the year. We have a question from Bulls on Parade saying, will the jobs number tomorrow determine the direction of the market for the rest of the month? And
Yes.
thereby the rest of the year.
Tomorrow is a big inflection point, I think. Tomorrow, we just pulled in 4 or 5 days where we're into a level that's held usually. So if we open up down and we reverse and that jobs number is behind us, I think that that would give a little bit more of a green light that we could continue to grind up somewhat. I don't know if we make new highs, very quickly, but if we open up down and we close down, I think people are going to start saying, okay, the profit taking's coming in. We've been up so much this year. Let's see where we go. So let's go to the S&P real quickly just to take another look. So with that being said, you got to look at these last 1, 2, 3 different intermediate tops. Okay, each time we pretty much came down to the 50-day and bounced off it pretty well. Here's 1, 2, 3. So with that being said, we're right here at the 21-day. So it's hard to sink your teeth into it's short with a number tomorrow, but it's also you can't sink your teeth into long because you don't know if this time it could still come into 1749. You don't know. We have a lot of weeks left in December. We still have the budget talks next week. You still have other things going on here. So with that being said, I think be light. No 1779. If we open up and fail, I think that would be bearish. If we open up down and reverse, you'll have another point of reference. You'll also, I think, have to watch to see what happens with the banks. You go to XLF, and it too had a really nice move. The last move happened on a strong jobs report, okay, where it engulfed this range, held higher, and that was your move. And now we're at the 21-day. So with that being said, the trend line's kind of here. So I would think that if we want to stay really tight and make new highs before the end of the year, this little area holds as 21. But if things want to just test trend lines, it could come all the way to the 50 at 2070. So I think this is a tricky spot. Most traders that I know, including myself, don't go in, with both hands, grabbing longs or shorts. Because again, shorting on the 4th day into a big number hasn't been the most profitable trade for 2013. Right. But I don't think with the move that we've had, it's very responsible to be so excessively long, especially if you're short term into just because we've been down 4 days. So it's one of those spots where I think there'll be action tomorrow, and we'll figure it out. And if they want to know what I'm doing, I'll be in the office. You could tune into my radio. You could join up. If you're not a VTF member, there are week trials. Why not become a week trial tomorrow, right? You get to see what I'm doing. You get to see what's coming on, what's coming off. You get to hear what I'm thinking, in the first half an hour to hour. Because I do think tomorrow will be a very, active inflection point type of day that can give us clues to what we should see next week. And with that being said, the majority or big money has been pretty much made over the course of this year, up 25%. And like I've said before, those guys who are just macro investors that see us up 25 or 26% on the S&P, they don't care if we're down 2% from here or up 2% from here because they've been just buying and holding. It's those guys like us that need to trade for P&L or maybe some fundy guys that need some alpha that need to figure out where can we make money the next 2 or 3 weeks. So I do think we have a low from yesterday that we could trade against. Tomorrow will be a pretty important day. But we've also been getting those 1 to 2 day areas in certain stocks that you could kind of love them and leave them and make some money and not have too much relative risk on because they have tight patterns and you see when they kind of resolve themselves and you go with it and then just don't stay too long. Based on what happened with the banks on the last jobs report, if we do get a stronger than expected jobs report tomorrow, do you expect a similar case? Do you expect the banks to go? I'll look to them. I'll definitely look and see if I could buy them. If we have a strong jobs report and they open up low and go positive, I'll try and buy a basket of them back. But if all of a sudden, they open up down and they're heavy like they were today on good news, and you'll know that good news is not good news like it was a month ago. Right. And that's what the market does. It changes, and you have to always, more importantly, read the news. You need to read the way the stocks are reacting to the news in order to navigate. And again, even if they don't bounce tomorrow, again, this trend line's lower. So that's why you can't be all in short, all in long. Tomorrow is going to be one of those flexibility type days where make a little bit of money and try and keep risk down. Yeah, everybody's waiting for good news to become good news. Again, we even had a comment and a question from Price Stocks right here who is asking for your thoughts on tomorrow, but said, do you see the market getting to a point where taper is good? Yeah, I do think so. And I think we were there earlier in the year. Look at it this way. A lot of people are blaming this pullback, this 4 or 5 day pullback, on the fact that the economy is getting better. If you also know that the McClellan oscillator, one of the things we track last week was plus 45. That shows you overbought. You go back to this chart real quickly. Look where we came from. We came from here in November. Okay, actually that's the XLF. So let's go to the SPX real quickly. So I think just bulls are getting somewhat spoiled. We were here October 8th. Okay, October 9th, which is about how many? Almost less than 2 months ago. 1650. Went 150 handles in that time. So with that being said, this is the small little pullback we had. The oscillator was plus 45. Now we're like maybe minus 10, so we're not even oversold yet. So with that being said, bulls are just definitely spoiled. And I like to trade from a bullish standpoint. We're not always going to be as pent up where you could buy 3-4 days. Some things might loosen up and volatility could hit. And volatility is not a bad thing, especially if you don't chase things and you're in a position with cash and thinking straight so you could handle it. So I don't remember what the question was. But I'm just
do you think we'll get to a point where taper is good?
Oh, there you go.
Which you do.
Yes, I think at this point, people want the economy to get better. And I don't think that the Fed's going to abandon us or abandon the market and let it fall apart, because finally it is trickling down and you're seeing better economic numbers. So why would they all of a sudden pull the plug and make people who've been starting to trust the stock market think twice? So I think it's going to be like the gas pedal, like they say. When everything's going okay, you have good economic numbers and the market's kind of taking it well, foot off the gas. If all of a sudden the market starts correcting, and you know what, a 10% correction isn't bad either. That happens. That lets people in. So we just haven't had one, so we're not used to it. So every step of the way, things are going to change. We're coming into the end of December. At this point, again, be light on your feet. We'll see what the composure is of the market to start the year. When everyone gets their new money, we'll see where we're at. Typically, that's a good bullish period because strong stocks continue, and then you get the January effect. So there's a lot of great action coming up. So I wouldn't really just be so focused or hyper-focused on the day-to-day or whether or not they're going to taper or not taper. But again, good news will be good news at some point, and I think the market will take it in stride, and you just have to really know your time frame so you feel comfortable navigating. And if you can navigate in all 3 time frames, I think you're way ahead of the game.
Well said, Scott. So good to be back for another StockTwits Q&A,
yes,
right?
Definitely.
All right, well, that's about all the time we have for tonight. Thanks, everybody, for your questions. Have a great night.